All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is the 22nd. Yes, I had to look that one up. The 22nd of July, 2025, ladies and gentlemen. Welcome. Today's Tuesday, and I wanted to quickly pick up on a few instruments here, mainly the euro dollar, because again we are at a very interesting spot technically, and just to kind of also pick up on some US dollar related stuff. Now, look, the economic calendar for today looks this way, that we don't have much, but we do have the Fed Chair Powell speech coming up. So this is something that the market will be kind of monitoring, I would say, because again, everybody's curious what's going to happen with the US dollar, because the US dollar right now is a little bit on the weaker side. Let me just jump into that dollar index. So yes, it is a little bit on the weaker side. It did drift lower. It is now near this, or should I say, in this key support zone, which I previously talked about, and this was my kind of breakout for the upside area. Now we're retesting it. So the question for me is this going to hold or not? Because if this is going to hold, then maybe we could see that rebound and a push higher. And because the reason why I'm kind of considering this to maybe to hold here a little bit is because maybe, just maybe, again, like trying to foresee the future here, but maybe it could be seen as a little inverted head and shoulders pattern, with the neckline being around here. So this is what I'm looking at. Hopefully this could work out in a way, but am I getting very comfortable with the upside here on the US dollar? Well, I wouldn't say so, because I'm still overall bearish on the US dollar, but let's say for a little bit of a push higher here, could we could maybe see that move. I'm drawing the Fibonacci here from the highest point of January to the current lowest point of July, and we can see that the 23.6 is just slightly above that neckline breakout. It's also near my other key area of resistance around that 99.30 zone. Slightly above that, we do have that 38.2 around 101 zone. But to be honest, I don't want to rush into things, because if it travels back above the 100 zone, then maybe this could be seen as a little bit of a reversal moment for the US dollar. But again, as I said, I'm a little bit on the bearish side, just because, from what I understand right now, the US does not need a strong US dollar, because again, exports are looking good, and everybody's kind of buying. U.S. Military equipment at a much cheaper price in relation to their own currencies. So, long story short, for now, like I said, I'm monitoring this territory very carefully. Let me just get rid of the Fibonacci. Monitoring the situation here carefully. If we do fall below that 97.14, or in general the 97 zone, then yeah, I'm leaning towards the downside again. The reason why I'm also a little bit more bearish on the US dollars, because looking at this picture here on Euro USD, we can see that we broke the downside line here with this short-term downside resistance line taken from the highest point of July, the current highest point of July. We still have some time left until the end of July, so it's basically 4 days today, this week, and 4 days next week. So plenty of time to actually maybe go and create a new high for this month. But again, that's just an idea. Certainly, we're for now we're being very careful. Look, I talked about in one of my webinars, I talked about this downside line here on the euro dollar. And I said that if we do break it, that's great. But I need also a confirmation push above the 1.1721 zone right here, marked by the high of the 16th of July, basically the highest point of last week. So we are currently finding resistance here. But if we clear it, yep, it's opening the door to some higher levels. Don't forget about the ECB. Because on Thursday we're getting the interest rate decision from the ECB. Yes, we are not expecting any cuts here, because we had already several cuts. So I think it was 8 in a row, if I'm not mistaken. Let me just launch this one here. So yeah, we had since April of 2024, we had one, two, three, four, five, six, seven, eight cuts since we peaked here. So yeah, I think the bank is kind of done for now, but this is what we're watching. We're not only watching the interest rate decision, but we're watching carefully the press conference. Now, this is something that I will be very keen on to understand what is Lagarde's plan about further cuts. Are they planning to drop the rate below 2%, or actually are we just going to stick around just a little bit above 2%, 2.15, and just kind of live with that, for now? Because again, we're watching inflation is around bank's target of 2% as well. So everything, there's in a way not really a need for further cuts, in my opinion. And the euro is kind of enjoying the strengthening moment on that, because although we're not seeing hikes, still the fact that there's not going to be a cut, that could be seen as a positive for the euro. So for now, like I said, everything seems to be pointing a little bit higher, but again, don't get me wrong, I mean, volatility could kick in, and that's why for me, if we suddenly fall back below this downside line and we fall back below the 1.1631 zone right here, I will consider a move lower. I'll consider a move towards the current lowest point of July, near the 1.1556, or maybe a little bit below that towards the 50-day EMA here, shown as the green line, because in the past it did provide good support. So let's see if we can do that as well again. But again, like I said, for the downside, I need to see a drop below this 1.1631 zone. So, ladies and gentlemen, that was just a quick take on euro dollar and the US dollar, and basically what's happening on the economic calendar that could affect these two kind of currencies. There are other things that are happening in the economic calendar in general. We do have the existing home sales coming out from the US, so something to keep in mind. But then on Thursday, apart from the ECB, we have the initial and continuous jobless claim. So also something that the market could be watching. Ladies and gentlemen, thank you very much for watching and listening. I hope you found it useful. Let me know in the comments what you think. Do you agree or you don't agree? Or maybe you have a totally different vision. Yeah, we'll go from there. So thank you very much. I'll see you next time in my next video update. Bye for now.